Will the stock market continue higher? Last week I said, now the bottom forming indicator is dropping, the bottom confirmation indicator is rising here, and the confidence level, the risk confidence level, is moving higher. This looks good going forward. And if I had to guess, I'd say the markets will probably go up next week, maybe the early part of the week, maybe for the week. Who knows? If this keeps happening, I'm going to have to start believing my own rhetoric.
I got him! Great kid! Don't get cocky!
This past week was good for the markets, as I just showed you. But will it continue higher? What are the metrics showing us now? So as I showed you just now, the markets ended the week mostly up, with ARK leading the way, small cap second. Unfortunately, the Dow was third, S&P fourth, and the NASDAQ lagged a little bit here. But if we look back over the past month, you can see that ARK and the NASDAQ are still leading the way higher. Small caps have kind of backed off a little bit, S&P's doing well, and finally the Dow is in dead last. That's where I'd like it to stay, honestly. And if we look back year to date, this looks great. You can see ARK finished in first, followed by the NASDAQ, followed by the S&P, followed by small caps, followed by the Dow. This is exactly the kind of healthy market you want to see. Now let's take a look at the current bottom dynamics. Here's where we were last week. If we look at last week, we had a rising bottom confirmation level here, along with a rising confidence level. That's what caused me to say I thought the market would go higher this week, and it did. Now where are we? Well, we just had a bottom confirmation here. This needs to be at 100%, and it was. And the confidence level needs to be fairly high, above 90, and I think we just about reached that. So, but we didn't really have a bottom recently, so this is telling me the market's pretty healthy, and hopefully this will continue going forward. Also, the safety confidence is dropping. That's also a good sign that the markets might move higher. And what about risk versus opportunity? Well, if we look at risk versus opportunity, things still look very good here. The risk level, which is the red line, is well below 80 up here, and I don't get concerned until this moves above 80. The risk acceleration, yes, it's moving higher here, but it's still just below 60 or touching 60. This doesn't give me any concern at all. And then the blue line, the opportunity level is moving higher. This looks really good. Don't you just love it when airplanes fly right over your house when you're recording? I just love that. Okay, hopefully this Sennheiser 416 mic cut that thing out. We'll see. Great. So if we look back over the past 1, 2, 3, 4, 5, 6, 7 weeks, you can see that the NASDAQ 100 has been solidly in first place over that entire period. This looks really good. And I'm not surprised that it's taken a little bit of a breather this week. And what about cash during this same time? Well, it started out here, moved up to here, went sideways. This was giving me a little bit of concern back here. You don't want cash to be anywhere in the top half of this table. And then cash fell here, and then it went up, and then it fell, and now it's staying down here. I'm comfortable with cash right here in the middle. Like to see it move a little bit lower, but this is fine. And what I like the most here is you've got the NASDAQ 100 in first, small caps second, SPY third, and the Dow Jones Industrial Average fourth. This is a very healthy stock market. And what about treasuries? Well, treasuries look very healthy. You have the longest duration treasuries, EDV and TLT, ranked 1 and 2 here as far as treasuries are concerned, followed by short treasuries. These are less than a year, and then followed by intermediate treasuries. Now, ideally, you'd like to see intermediate treasuries up here, but that's not the case right now. So how are things looking with the buying and selling pressure? Well, if we take a look at the Dow, SPY, the NASDAQ 100, and ARK Innovation, they all look pretty good. You can see the Dow really shot up here and then pulled back and continued higher. But the buying pressure, this solid gray line, is still above the selling pressure, so that looks healthy. For the S&P 500, buying pressure has stayed above the selling pressure. This looks healthy, and we have a nice looking rally here. The NASDAQ 100 was in a very nice rally here, but you can see that it's kind of started to flat top a little bit, and you saw that in some of the other metrics. And the buying pressure has fallen here, but it's still above the selling pressure. So hopefully this will continue going higher next week. And then for ARK Innovation, a very nice rally here, as you saw in some of the other charts, and the buying pressure is well above the selling pressure. This looks very good. And I don't want to ignore the small caps, but if you can take a look here, small caps were kind of going nowhere, and then all of a sudden just launched higher. And you can see that in the buying pressure, which is well above the selling pressure.
Just doesn't work for me. I wanna play with fire.
And if we take a look at sector rankings, so if we look at last week, we had a very healthy situation here with Bitcoin, technology, semiconductors, ARK Innovation, consumer discretionary, all up here at the top, and then cash down here. This looks very good. What about this week? Well, if we fast forward to this week, you can see we have technology, semiconductors, technology again, consumer discretionary, ARK Innovation. This looks extremely healthy. Still looks very good. Cash moved up one spot here, but I'm not really concerned about it. And now let's look at sector rank acceleration. So these move much more quickly and kind of give you more of a real-time picture of what's happening in the market. And you can see that last week, this gave me a little bit of concern. Cash was ranked number 1, not good. And you can see the consumer discretionary was still up here, well above consumer staples. Well, where are we this week? Well, you can see that technology is ranked number 1. Technology here, semiconductors here, consumer discretionary here. This is great. And cash is falling and has fallen quite a bit lower. So this makes me feel a lot better about how this looks going forward into next week. And how did Treasuries perform over this past week? Well, you can see that the highest risk Treasuries, EDV, finished in first, followed by TLT, followed by IEF, and then IEI and SHY were kind of lumped together here. So this is a healthy rally attempt, but you can see that they've kind of been going nowhere. Let's take a look at the past month. Yeah, actually they're down over the past month, although recently you can see that the longer duration treasuries are trying to make a comeback here. And if we look year to date, they've kind of gone nowhere. So I still think there's opportunity here. These treasuries are trading near their lows, which you can see here and back here. So, maybe there's some good upside here as we move forward, but we'll have to wait and see. And what about that inverted yield curve? Yep. You can see that it hasn't really gone anywhere in the right direction. We were extremely inverted back here. What the heck? That's a new cursor. Okay, well, we'll go with it. We have a new cursor, folks. So back here, you can see that it was inverted 1.1%, which was really, really bad. And then if we fast forward to today, we're still inverted about 80, almost 81 basis points. This is moving in the wrong direction. You really need it to move way up here off the chart to become not inverted. And what are the futures markets telling us? Well, they're saying that there's a 72% chance the Fed will leave rates right where they are. They won't raise them at all. And there's a 27, almost 28% chance that the Fed will raise by 0.25%. And if we look at the buying and selling pressure for treasuries, I had a little trouble with the chart for SHY, so I just left it off. It's not that important. But you can see that treasury prices have been falling. They were falling back here. Now they're sort of trying to go up. They're kind of flat to up. And you can see that the selling pressure, which was very high here, has collapsed. The buying pressure is now, well, was above the selling pressure. Now they're kind of touching here. What about IEF? So these are 7 to 10 year treasuries. Well, you can see they were falling, again, trying to rally here. We had a collapse in the selling pressure. but now the selling pressure is shooting higher. This doesn't look good for what I call sort of intermediate to long duration treasuries with the selling pressure shooting up like this. But what about 20-year treasuries? These are the long bonds. You can see that the price was falling. We've had a fairly nice rally attempt here, and the buying pressure was above the selling pressure, and looks like, it's hard to see in this graph, but it looks like they're about at the same level right now. So we'll have to see how all this plays out going forward. How's gold doing? Well, those gold diggers haven't been getting much for their money, have they? Gold price has been just falling here. Now it's sort of trying to rally here, but doesn't look very promising. Selling pressure moving higher and is above the buying pressure. And what about Bitcoin? Well, with the SEC going after Coinbase and Binance, Bitcoin hasn't been the place to be. And you can see that here. You can see that the price has been overall falling on a downward trend. Tried to have some positive influence here. The SEC news hit, and you can see the buying pressure collapsed and the selling pressure has been increasing. This doesn't look very good for Bitcoin right now. When we look over longer term time frames like year to date, now I know that's not a really long time frame, but it's longer than a few weeks or a month or so. The equity markets continue to look very healthy. To me, it looks like there's both a healthy equity risk appetite and a healthy treasury risk appetite. And hopefully, the fear of missing out, or FOMO, will continue to drive the markets higher. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now.
What did you say when I told you maybe this wrist wasn't gold proof? Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars that I'm holding. I like the cold but it's lonely, yeah. This life feels like the sunny water.